All right, today we're tackling one of the biggest financial stories out there right now, China's massive property crisis. We're going to break down how this economic engine that seemed absolutely unstoppable just suddenly crashed. And, of course, what that means for the rest of us.
For decades, China's property market wasn't just part of its economy, it really was the engine. It felt like this foolproof way to build incredible wealth. But then it all just came to a screeching halt.
So, we're going to unpack exactly how that boom turned into such a spectacular bust, one that led to the collapse of a corporate giant and really shook the very foundations of the world's second largest economy.
Okay, let's dive right in. And to do that, we have to look at the moment this whole crisis really exploded onto the world stage, the fall of the property developer Evergrande. Before all this happened, a lot of people thought Evergrande was just too big to fail. I mean, its health was tied to so much of the Chinese economy. We're talking about a single company with enough land to house 10 million people. Just think about that. The idea that it could actually fail, it was basically unthinkable. And the scale here, it is just staggering. $300 billion in liabilities. I mean, to put that into perspective for you, that's more than the entire GDP of a lot of countries, all owed by just one single company. Wow. And you have to remember, this wasn't just about numbers on a spreadsheet. No, the real-world impact was huge. You had thousands of ordinary people who had poured their life savings into homes that were now just empty, half-finished construction sites. This led to these widespread protests, this mortgage boycott, or people just flat out refused to pay for homes that didn't exist.
So, the big question is, how did we get here, right? How does a market that's just booming suddenly go into a complete freefall? Well, the answer really lies in a huge policy shift from Beijing. You see, for more than a decade, the model for developers was super simple. Borrow money, start building, and then sell the apartments before they were even finished. They took on massive, massive amounts of debt to expand like crazy, and it was all fueled by this deep cultural belief that property was the safest and, for many, the only way to build wealth in China. And this is the crucial turning point. By 2020, the government was getting really worried about a massive speculative bubble. So what did they do? They brought in a policy called the Three Red Lines. Think of them as strict financial guardrails. The first one put a cap on a company's debt compared to its assets. The second limited how much they could borrow compared to their own money. And the third, and this is a big one, forced them to have enough cash on hand to cover all their short-term debts. Basically, the party was over. The government was telling developers, you have to get your debt under control, and you have to do it now. And in the effect, it was an immediate, massive shock to the entire system. This policy didn't just tap the brakes, it slammed them on, hard. The whole business model the industry was built on just stopped working. All that easy money from selling unfinished apartments, the money that developers like Evergrande absolutely depended on to start their next project, it just vanished, triggering this huge liquidity crisis. So with that credit tap suddenly turned off, Evergrande's collapse, well, it wasn't a one-off thing, not at all. It was just the first, and yeah, the biggest, domino to fall. And the problem spread like wildfire. After Evergrande defaulted in 2021, you started seeing other huge developers, names like Kaisa, Sunac, and eventually even Country Garden, which was once the biggest of them all. They all started to wobble and fail. It created this massive wave of defaults right across the whole sector. And as you can probably imagine, public confidence just evaporated. Poof. Gone. New home sales absolutely plummeted. We're talking double-digit drops for 3 years in a row, all because people were just too scared to buy. This is a classic textbook example of what economists call financial contagion. It's this vicious cycle, right? The developers' problems led to construction stopping. That destroyed buyer confidence, which meant sales fell even more. And that, in turn, put even more developers on the brink of collapse. It just feeds on itself. Okay. So now Beijing is facing a crisis that could derail the entire economy. So what do? They shift gears completely. They go from cracking down on the market to trying to prop it up. So in late 2024, Beijing rolled out this sweeping rescue mission. The plan had a few different parts. First, get money flowing again, but only to certain whitelisted projects they deemed safe.
Second, try to get people buying again with things like tax cuts. And third, start using government money to buy up some of that huge backlog of unsold apartments. So, to put it simply, the government was pulling out all the stops to make it cheaper and easier to buy a home. And on top of that, they created this massive 300 billion yuan fund specifically so that state-owned companies could go in, buy up empty apartments, and turn them into affordable housing. Okay, so after all that, the crash, the contagion, and now this massive government rescue mission, where does China's property market actually stand today? Well, the road to recovery, it's looking pretty long and uncertain. We're definitely seeing some mixed signals. The recovery, if you can call it that, is extremely uneven. So, for example, you might see the prices for fancy new apartments in a place like Shanghai actually go up. But at the same time, the much bigger market for regular secondhand homes, that's still falling in most major cities. And if we zoom out a little, you can see the bigger economic shift that's happening here. At its peak, real estate made up almost a quarter of China's entire GDP. That share has now shrunk a lot. And you know what? That was actually a deliberate, though incredibly painful, goal of that 3 red lines policy we talked about. And when you talk to the experts, the consensus seems pretty clear. The worst of the freefall is probably over, but a real widespread recovery? That's still years away. Most analysts don't think the market will really find its footing until 2026, maybe even 2027. So was this a controlled demolition of a dangerous bubble, or was it the end of the entire economic model that powered China for decades? What we know for sure is this: the era of property driving China's incredible growth is over. The massive question that remains is, what comes next? And the answer to that won't just define China's future, it's going to have ripples across the entire global economy.